High income is still a coveted thing, and getting dividend income from stocks, yield from bonds, and rents from real estate, they're not the only ways to get income. There are many other paths for generating cash flow. For example, you can get income by writing or selling covered call options. And today's ETF Battles is another viewer-requested clash, this time between four covered call ETFs. It's a quadruple header. Stick around. Welcome to ETF Battles. I'm Ron DeLegge. If you're here for the first time, be sure to hit that subscribe button to ETF Guide TV. Hit the like button if you've been enjoying the show. And keep your awesome ETF battle requests coming. Post your ETF ticker symbols in the comment section below or on our Twitter feed at ETF Guide. Also, if you see a suggested ETF battle by another viewer that you'd like to see, hit the like button on that comment. It helps us to see which ETF battles are the most urgent. Selling covered calls is another strategy for generating cash flow and high income. And today's quadruple header matchup was thrown to us by C. Knobloch and Two on YouTube, or is that just Two on Tube, I think it is, who both wanted to see this particular matchup, this covered call ETF style showdown. And C. Knobloch, by the way, is one of our more thoughtful viewers. He always sends us really awesome battle requests. But thank you both for suggesting today's ETF battles. We're doing it. So we've got JEPI going up against NUSI, going up against QYLD versus RYLD. Man, that's a lot of ETF ticker symbols. And my battle scorecard is pretty crowded. It's just like the beach in July. So judging today's matchup is Cinthia Murphy with ETF.com and Dave Nadig with ETF Trends. Dave and Cinthia, it's great to see you. Welcome back.
Hey, Ron. Hey, Dave. Good to be here.
Great to be here. Let's go.
So we got our four battle categories. We got cost, exposure strategy. Then we combine performance and yield. And of course, yield is a big one in this particular matchup. And then we got our mystery battle category where you, the judges, can showcase your analytical prowess by selecting that single factor or maybe multiple factors of your choice to make your convincing argument. Our judges are going to pick their favorite ETF in each category. They can also opt for split decision. And at the end of the show, we're going to declare an overall battle winner. We've also got the possibility for wild cards. We'll see if we get any of those. So let's get started with our first battle category, which is cost. Dave, you're up.
Yeah, this is a pretty straightforward one. Of these four, right, there's a clear winner, and that's JEPI at 35 basis points. Everything else here is pretty expensive. QYLD and RYLD, both from Global X, at 60 basis points. NUSI at 68 basis points. I would argue when we're talking about the kind of yields we'll get to in a minute, those aren't out of control in any case. But if we're just focused on cost, it's got to be JEPI for the win.
That's a strong start. Thank you, Dave. Cinthia, how do you see it when it comes to cost?
Mine is a weak start. I'm going to say I agree.
Okay.
There's no discussion here. JEPI is the definite cost winner here.
Very good. So our judges agreed on cost. Next up is exposure strategy. Cinthia, who's your battle winner?
In this category, I kind of like NUSI, the nationwide product, because of all these ETFs, doing the covered call strategy, NUSI has a collared strategy. So it writes calls, which gives you the income component on the NASDAQ 100, but it also buys protective puts. So it gives you that downside market protection. So I like the fact that it does both things relative to the other three that don't do the put side of the equation. So to me, in terms of the exposure, I like NUSI, even though it does not have the highest yield of the four. I like the downside protection in this product.
Excellent. I got you down for NUSI on exposure strategy. We shift now to Dave. How do you see it in terms of exposure strategy?
Well, I'm going to be a ditto on this one as well. I think that getting that protection from the covered call strategy, I think is really critical. Two of these products, both JEPI and NUSI, really are focused on that 100 key stocks. In the case of NUSI, it's directly in the Qs. That's a risky index to start from, right? That is a high growth, high volatility index. So having a little bit of coverage on the downside, I think makes a big difference. The other two strategies here, QYLD, RYLD, very traditional index-based covered call writing strategies. You'll get the yield, but you're also going to get the downside.
All right, that's solid analysis. That takes us next to performance and yield. So we've combined these two categories, and Dave, you're still up.
Yeah, this one's a little bit trickier because we're trying to get two numbers. I think we have to give this one to RYLD if we're just going on the numbers, because its current yield is about 11.5%. I did year-to-date performance to look at this. I think that's relevant for most investors. It's up about 20%, as we've talked a little bit about the small cap value rotation that's happened, or maybe is happening a little in the markets. So on that basis alone, I think you got to give it to RYLD.
All right, I got you down for RYLD. Thank you, Dave. Cinthia, how do you see it in terms of performance and yield in this quadruple header?
So first, this is a first for me in a battle where we just agree on every category. And it's not because it's Dave, but so it happens to be so. But I agree with RYLD. And I would add on that performance that I think sometimes, some of these products are actively managed, some are index-based, but just the idea of having that segment benchmark you can look at. And if you look at RYLD relative to the Russell 2000, of these four is the only one that's actually outperforming the benchmark in the segment. NUSI and QYLD are underperforming the NASDAQ 100. JEPI is underperforming the S&P 500. So, even relative to a benchmark that represents a segment these things are navigating in, RYLD is doing better. So that's the winner in this category.
That takes us next to the mystery battle category, where our judges can pick that single factor or multiple factors to make their arguments. So Cinthia, tell us, what is your mystery battle category and who wins it?
Mine is really simple, actually, which is just asset growth and popularity. And I give it to QYLD. I think it's an easy idea to understand. I think option strategies are sometimes complex for investors. But just this idea of getting some income yield about a NASDAQ 100 play, it's a very appealing idea. It's a $3.5 billion fund or close to that. No other ETF in the segment comes close. It does a great job. And this year, it's picked up more than $1 billion in assets. No other has come any close to that. So I'm just giving it to popularity, if you will, to QYLD.
Dave, how do you see it in terms of your mystery battle category? What is it and who wins it?
Well, Cinthia is exactly right that it's really hard to argue with QYLD. It has just been an income generating machine for $1 billion of new money. Hard to argue with that. However, I think that we're in an increasingly fat-tailed market. I think that's true on both ends. And because of that, I really have to give this to NUSI. I think the NUSI, because of that protection, allows you to use it in so many more interesting ways. I know a lot of advisors that are really using NUSI as a bond replacement, right? They can take 10% of their equity off the table, put NUSI in, they're getting bond-like yields. We wish, bond-like yields from the 80s. But you're really not getting full equity risk. So I think it hits a sweet spot for advisors. So I give it to NUSI.
Excellent. I got you down for NUSI and NUSI. Now we move to the part of the show where our judges get the opportunity to recap their overall battle winner in this quadruple header. So we're going to give it to you, Dave, and then Cinthia after.
Well, if you've been keeping track, I think you're going to realize that NUSI wins here. I think these are all very sharp tools in the drawer. I don't think you'd go wrong with any of these products. You just need to use them for their intended purpose. I think NUSI is the most flexible and most useful of these products, and that's why I give it the win.
Thank you very much, Dave. Cinthia, your final chance to weigh in. Who is your overall battle winner?
Well, this is a tough one because I have a different winner for each categories, but I agree with Dave's point. And what I like about NUSI is I like the nationwide approach to this stuff anyway. I think their whole lineup, this whole big focus on income, I think is really interesting, and it's kind of fresh, especially coming from an insurance company. So I think it's a really cool element in the toolbox. But, popularity contest to me is still QYLD. And I think investor, where they're putting their dollars to work is a meaningful. So can I have a split decision on the very final recap or no? If I can, I'm splitting it. If not, then Ron, I'll let you be the judge.
You can do whatever you want. Listen, the more mayhem per capita that we can have on the show, all the better. So it's completely up to you. If you want to do a split decision, fine. But I'm gonna score this according to how you guys have overall, each of these categories. But what is it that you would like to do?
So I will do NUSI and QYLD as the split decision here.
All right. Well, my final scorecard, and thank you, judges, for weighing in, matches exactly what you just said, Cinthia. And it's a split decision between NUSI and QYLD, with our judges agreeing on most points, but really my scorecard is scattered all over the place, with JEPI winning in terms of cost, NUSI winning in terms of exposure and strategy, and then RYLD on performance and yield. And then the mystery category was kind of the one point where you guys had different takes, with Cinthia favoring QYLD and Dave favoring NUSI. But there's merit to both of these ETFs. It really depends on what you're looking for. QYLD, of course, the simplicity of the NASDAQ 100. You can't argue with the AUM, 3 billion and seemingly rising. And then on the other hand, NUSI with the element of that put protection, which is really unique. And it's something that, as Dave mentioned, is an important element, especially in downtrending markets or markets that may not be as friendly as they are right now. So a great job. I think at the very least, our judges have given us a starting point. For those of you looking at investing in covered call ETFs, check out these two tickers, NUSI, NUSI, and QYLD. Well, that just about does it for today's episode of ETF Battles. A huge thanks to our judges, Dave and Cinthia, for helping us to sort through today's matchup. We appreciate your insights. We will see you soon, and keep up the good work. Which ETF battles would you like to see in our next episode? Post your thoughts in our YouTube comment section or hit us up on Twitter at ETF Guide. Thanks for watching. I'm Ron DeLegge. Watch the battle before you invest right here on ETF Guide TV.